Hello, trading is closed on July 6, 2016. I'm going to go over all my predictions from yesterday, but I'm going to change the order around a bit and do it later in the analysis. Early on, MEJT said ultimately lower price it would print, which they did. Here it said a lower price it would print, which they did. The system marked the move as false and said this price would be recovered after this time, which it was, and I have no new signals for it tomorrow. Basically, this is a positive formation to gap down, hit lower low, rally all day long, close over all the intervening highs. The only thing that would kill it would be if we gap down sharply at tomorrow's open. It's also positive for tomorrow that the day's pattern has a strong tendency to rally all day long and close near the high. Only thing that would kill this would be to gap down sharply. There's also a second chance we could have an A-like pattern with a top in the middle of the day. But let's go over the odds that we gap down sharply tomorrow, even though futures are up and we close near the high. It isn't forced, but for reasons I'll show, it's not impossible. Now let's go over the calls. One call said that we should have a gap outside of the day's range. That we did. I said the odds favored it being lower, and it was. The other prediction was that, that's not the one I want. The other prediction was that I couldn't rule out 2091.29 printing because that would give us a sequential sell signal without the early close of bar number 13. I couldn't rule it out, and it happened, and that gives us a sell on the 65-minute chart. In alignment with that, we have a sell. Here's bar number 13, which has to close over the close of number 8 on the 78-minute chart. Now remember, these have stop losses based on closing prices, so it doesn't preclude higher prices printing during the day, but we do have a sell signal right at the close. This is a chart I showed earlier. This trend line here, if you carry it back all the way back to the start of the rally in, this doesn't want to show it, but if you take it back to the start of the rally in 2009, it does hit it right over here. Now if you take a parallel trend line right at today's high, parallel to that one, and carry it back to 2009, you get some pretty amazing hits. Right over there, right over there, right here, right here, and all the way back to here, the first reaction. So this is trendline resistance going back over 7 years right at today's high. This was not the chart I wanted. This is the wave count I've been using, and if it's correct, it's pretty hard to see us stopping right over here, and we still have this 21.13.32 target, which ought to print at some time, but we still need to see us undercut 1939.73 before going sustainably over this line. That's cutting it pretty close. But it's possible this count's wrong. It certainly isn't the only count. Let's look at one other one. What if this isn't wave B? What if that ended right over here? What I called B was A of some degree, and here's B of some degree here. A, B, and what if that's wave C, these three waves we've made now? If so, here's wave red A, you'll see wave red C is exactly 38.2% of wave A. So this could be the end of B. I don't know why this is playing games with me. This could be the end of B right over here. And if that were true, then you'd have gray A ending here, gray B ending here, and if you have wave gray C starting from right over here, and it's equal to A, it would be down in the 1700s. And I think that's what awaits us if we gap down tomorrow, which certainly is not a lock. So tomorrow's open should be interesting. This is a positive pattern, and unless we gap down sharply, I would expect higher prices to print. And let's not forget we have a target to fill the hole in the wall gap. But if we gap down sharply tomorrow, if that happens, it could be the start of a very long drop. And that's today's call.